Welcome back to the Eric Krown Crypto channel, wishing you a happy early start to this nice hump day. A hump day where we're all about to get humped by good old J Powell as FOMC looms overhead. Very similar to yesterday with the CPI releases. I would expect massive volatility. Wow, that's a crazy statement. It's like, no shit, Sherlock. Anyways, I did want to once again come back at this with a couple of interesting setups. One on the lower term time frame and one on the higher term time frame, actually both completely opposite of each other. As you would expect, lower term time frames don't necessarily need to play exactly with higher term timeframes, and the nuance to what that essentially means for the next few weeks here. Now, with that in mind, I did want to reiterate my stance on current price action that Bitcoin very likely has a major low in. I don't think that's like I think that statement's like rather self-evident at this point. It's no longer like a major statement that Krown's making, but it's just, you know, we have a nice low in, okay? Doesn't mean that the macro low's in, but very likely to try higher first. So ultimately, yesterday we were having a bias towards upside continuation towards 17.7, I believe it was, and then maybe even 18. Obviously, both of those have been met. So where does that essentially lead us for today? So let's just jump right into the price action. And I wanted to start off today with the HPDR indicator. The HPDR indicator gave us a major bias for upside coming in from Monday based off of this signature over here, closing below the bottom side of the 50% historical range lows. And then we were looking for a move back up basically to the range highs, which we obviously got, and then continuation on CPI release yesterday. So now on the other side, we have an equal but opposite setup over here. So what is it? Well, it's on the hourly time frame, not the 30-minute time frame that we were looking at the other day, but on the hourly time frame, we do see several closes above the blue historical range highs here. So that's this area right here, as denoted by the red line. So I should probably just get rid of it because it's easier to see without the fucking red line, right? But once that happens, then we can go and cross-reference the volatility indicator, and we want to see a decrease on the moving average from one close to the next. And at that point, we can mark that off, and anywhere between there and the next range highs is, you know, a setup essentially. So in this case, it would suggest some downside, a bit of a pullback. We can actually go reference the data. And again, to avoid the confusion here, this data, the data of strategy 15 and 16 is available for the Quant program. It does not come with the indicator. Similar to strategy number 6 and 7 with the Jewel light. You don't like, you can see it there, but it doesn't, it doesn't come with the actual program. Just to avoid some confusion there, because I think I did a poor job of explaining that the other day. Anyways, in this case, hourly time frame, blah, 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 blah. What's our results? Well, we have observed over the past 50 iterations, 36 were wins, so 72% win rate with this setup. Which, you know, is pretty good, but that ain't 100%. At the end of the day, we're talking about statistics, not certainties. Anyways, going over to what I think most people are interested in, the average percentage gain on that, which would be a decrease in price, would be about 2.5%. And I would say that if this is going to play out, it's probably not going to be like a strong mover. It's probably going to be closer to the bottom side of the first standard deviation. I think that would probably be more reasonable, which is more around 1.25%. So if we were to go back to price action, or let's go to here, actually, this is going to be a little bit easier. On the hourly, you know, it would be suggesting a pullback, obviously. And if it is going to be suggesting a pullback, well, you know, we can take that essentially from the median of the range. And 1.25 basically puts you back down towards about 17.6 to 17.650. So the range lows on the shorter term timeframes. If we were to go for the full average at 2.5%, that would bring Bitcoin actually closer to 17.450-ish. So that would be, I believe, obviously that would be well lower, but 17.450 is basically, you know, the top side of the prior range highs on a wick basis. So I do like the confluence right there, obviously, but going back into it here, you know, that would suggest that first things first, probably a pullback, and obviously that can be invalidated. How do you invalidate? It's not that it's an invalidation, it's just a fucking loss, which does happen, obviously, as we looked at earlier. But that would just be with any sort of a move above the current wick high, which is about $18,000. All right, sweet. Now that we've gone through that, let's go reference my notes once again, and let's go over here. Do we want to do anything on the lower term timeframes? I mean, it's basically the same thing as yesterday as far as ranges go, but we can go and reference stochastic momentum and see where the pivots are for the, well, basically for all the timeframes. Daily is still pivoted to the upside, I should say. And will be remain with upside upside momentum as long as Bitcoin's closing above 17,360 on CME. 12-hour time frame is going to be upside momentum as long as Bitcoin's above 17,775. Keep these numbers in mind, by the way. You're going to see them pop up a lot. 6-hour time frame is going to be pivoted to the upside as long as Bitcoin's above 17729. 4-hour time frame is going to be pivoted. Oh, what do you fucking know? 17,750. Hourly is going to be pivoted to the upside as long as Bitcoin's above 17,772. So all coming in around the same levels, all with very, very low volatility reads as well. So, if Bitcoin does fail that momentum pivot, do expect the pullback to get a little bit more nasty here. Maybe even going for as much as 17,450 or so in the short term. But of course, all of this is second to the event of the day, the FOMC meeting. Whatever happens there, that's going to massively influence price action. So realistically, it's kind of difficult to talk too much about the lower term timeframes in this case. But I do want to say that I still have an upside bias overall, despite a short term time frame. Pullback based upon those statistics. And it comes over here to the 12-hour. It's basically a continuation of yesterday's analysis, but yesterday we were looking at extreme lows on volatility for both the 12-hour and the daily time frame on CME. Now you can see them start to slowly expand here, but which does suggest that this probably has more on it. But that coupled with our momentum oscillators does give us, well, some interesting things to be looking at, I'd say. 12-hour time frame, obviously yesterday had that hidden bullish divergence. It was a phantom drive right there, yes, but it did give us a bias towards upside continuation. Now back into the bullish control zone. So overall, short-term pullbacks likely do get picked up, and then 12-hour Joule has a continuation of the signal that we saw get started last Friday. Actually, obviously it's a 12-hour time frame, so it takes some time to play out, but ultimately it is now supported by the DMI indicator as well. So I do suspect that this one still has more to go actually too. So ultimately, how does that kind of fit in the picture? Like I said, short-term time frames probably pull back, and then they probably do try higher again. Of course, I'd like to see an actual break and closure above the current high, basically at 18,000 bucks. At that point, very likely to see 18.5-ish, let's say. And personally speaking, I don't think that things would stop there. This is like one of those areas where the line, where all of the line drawers will mark off, of course, and for good reason. I mean, it should be marked off, obviously, but I see it so fucking often when you see an area like that things just absolutely fucking blast through. Anyways, obviously that would be further away. So let's now go into something that's a little bit newer. It's going to be on the 2-day time frame. It's a 2-day time frame, not for CME, but for spot price action. And we have another volatility versus stochastic momentum setup over here. The volatility is going to be represented by this indicator, the BBWP indicator. Anytime it's gotten down to 10 percentile or lower, the expansion phase that naturally occurs from those areas over the past almost 5 years now has led to an average move of 35.5% over the course of about 2.5 to 3 weeks on average. Stochastic also has been correct in getting the direction of that volatility expansion 84.5% of the time. And if we were to take a first standard deviation measurement of where we expect the results kind of fall between, well, that would give us a range between about 25.5% all the way up to even 44%. In this case, the 2-day time frame is closing tonight, and we are starting to see some signals of volatility expansion over here. So if we see this fall through, that would be a good indication that this setup is in play. And the 2-day time frame stochastic oscillator is continuing with upside direction as long as Bitcoin is closing above 16,200. That one's closing tonight, by the way. So I'd say it's rather likely, although, when you do have an event like we do today, I guess that would be, that would be the time for a nice fake out, to be fair. But in this case, that would give us a bias basically into early 2023 for upside continuation. And, on the lower end, the bottom end of the first deviation, I mean, that would put Bitcoin at about 19,500 to 20,000 bucks. Anywhere around there would be fair game. For the average, 35% puts you obviously back around 21,500 bucks. I did think it was rather interesting that, that does seem to match up closer to the daily 200 simple moving average, which we have not seen Bitcoin test basically since 48,000 bucks, like 9 months ago. So quite some time. So ultimately, if we are going to get something like that, this would probably be the time for that, coming into these next few weeks. So I do kind of remain with an overall upside bias despite a short-term pullback. The only way that I really start to re-look at these ideas is if Bitcoin basically fails below about, especially 17,000 bucks, even 17,200 would be bad enough. But Those are kind of the critical areas for me. Until then, I think that is a good place to be leaving off on this particular video. Again, be aware that today is FOMC day, so expect a lot of fuckery as usual, and we'll check back after the dust is settled and see what the picture looks like. So with that said, take care, much love, and see you hopefully soon.